Hi guys, welcome to honeystocks.com halftime report for the 26th of September 2019. Now, my emails, messages, social media has kind of been blowing up this week, just everybody asking for an analysis on this stock and that stock. So what I've done is I've really just compiled a list of stocks, no particular order. I also want to share with you some of the stocks that are working very well for some of my clients at the moment. I think it's important that I'm able to show you where the strength is in the market at the moment. But if this is your first time here, please, as always, just please pause the video and make sure you're comfortable with that. The other thing to say is I don't do get-rich-quick schemes. I don't do penny stocks. My time horizon for my trades are generally weeks to months. I'm not a day trader. I'm not in and out every 30 minutes. I couldn't think of anything worse. So hopefully that style speaks to you in some way. And maybe just to give myself a little bit of credibility, I'm currently working through my chartered status with the CMT Association, which technical analysis is clearly my thing. So if you enjoy it, please subscribe to the YouTube channel. There should hopefully be a little subscribe button down in the right hand corner there. But let's dive into the analysis. Now, I've been asked a lot this week where the money is moving to, where we should really be looking for strength in the market. Now, some of you will not be aware of what this is, but this is basically a rotation graph. It really just tells me where we should be looking to focus our attention in the market. Now, what I would say is I have around 100 different ticker symbols on this rotation graph, but what I've done is I've just narrowed it down to the ones that you guys might recognize. Obviously, we can see that there's a rotation going into gold at the moment. It's one of the improving sectors. Utilities is absolutely flying at the moment. The Russell 2000 is slowly starting to decline. So these are the areas that we should really be looking for. Obviously, we have consumer staples is starting to advance out of its lagging sector. Hopefully, if this rotation graph holds true, we should start to see steadily improve, and then it moves into one of the leading sectors. And the expectation with a rotation graph is it just keeps going round and round. So it actually helps us a lot in the identification of where the next trends might come in. Now, this is just a comparison chart. We obviously understand that the S&P 500 is the benchmark, but over the last 12 months, these are the areas that you should really be, focusing your attention on. I'm very much watching for a participation from small caps and mid caps. I think for the market to continue on its next leg higher, they both clearly need to participate in any move. Because at the moment we're seeing a bit of a rotation into defensive areas of the market. We also have to factor in seasonality. September is recognised to be a bit of a shit month, so we also have to weigh up that the end of September is notoriously difficult, and that seems to be holding true at the moment. So the seasonality effect with September is absolutely textbook at the moment. It's something that I made everybody aware of at the start of September. I also published a YouTube video on this very subject a few weeks ago. So absolutely, there's a lot of caution out there. We also have to consider that the S&P 500 is pushing up against major resistance. We're at the 261 extension of the 2008 decline. And this is a big deal. So for those of you that are wondering why the market is stalling and it's not moving any higher, this is one of the reasons for that. Most of you out there will be blaming, Ukrainian transcripts, Trump tweets. I accept it's a very news-driven environment at the moment. I'm not naive enough to think that it's not. But, I focus mainly on price and what price is telling me, because price really tells me what's happening in the news. When I see the market decline, I can tell that there's bad news. When I see the market rise, it's either a function of time or it's good news. So price tells me everything I need to know. And I would highly encourage you, if you're somebody that watches CNBC and Bloomberg all day, just experiment for a couple of days and switch the TV off. But this is the mid-cap index, very much looking for a breakout here. I think above here the market rips higher. We also have the Global 100 index, basket of stocks from all over the world. All the major US tech companies, Japanese, Samsung, just all the big companies based around the world make up this ETF. So I think if again the market's to take a next leg higher, I think we would probably see a breakout here. Now, gold is very, very interesting at the moment, and this is something that I've obviously talked about for the last few months. We have very clear uptrend. It does look like support is holding true at the moment. I think if we break below this trend line, it probably wouldn't be a catalyst for me to say, do you know what, this is a bit of an issue, let's exit. I think that point would probably be below here, where we might just want to say, you know what, let's reallocate risk elsewhere. It's a very logical approach that I've got to the market. You have your money in one asset, that rises, you profit, eventually the trend will end and you just reallocate risk elsewhere, and that just seems very logical to me. But what I want to do is share with you some charts that are working very well for some of my clients at the moment. I think Procter & Gamble is the obvious choice. I think this is the first time I've maybe discussed it on any of my videos. The reason for that is I obviously need to provide my clients with the best charting, and this is absolutely a place that you would want to be. Beautiful uptrend, and yeah, you know, trends run much further than you think is possible. So I think Procter & Gamble might be worth a bit of due diligence. We also have American Waterworks. What we have here is we've had resistance, which has now turned into support. One of my clients is now compounding. I think he's maybe got 3 or 4 positions running along this trend now. And absolutely, it's a defensive kind of stock utilities company. The only concern is that we're possibly moving into a bit of a sideways range, so we do need to be very mindful of what happens at $130 if we reach that. ZTS is logical. Again, I highlighted this one a couple of weeks ago. I just said, look guys, this is a potential area that you might want to consider. We're bouncing off support here, and lo and behold, that thesis has been proven correct for the moment. We're in a bit of an uptrend. Obviously, the market's kind of stalling a little bit this week, but that's perfectly normal. I think we just have to be very selective in the positions that we take. We have to understand that the market can flip on us in an absolute instant at the moment. So capital protection is always the number one priority, and profits will generally follow good capital protection. But you do have to be very, very selective at the moment. It's very, very difficult if you don't really know what you're doing. Southern Company, again, this is a stock that some of my clients have multiple positions on. It's running beautifully, and you know, again, another utility company. So I think Southern Company might be worth a bit of due diligence, and you know, if you feel like there's an entry to be had somewhere, then I would urge you to do a bit of due diligence on it. But again, very, very clean uptrend, very stress-free, exactly what you would look for in this type of market environment. Weight Watchers, I think I've beaten this one to death over the last 3 weeks. I'm getting a lot of messages asking me what my thoughts are, given that I have been advocating it as a buy. I think what we've had, you know, from my initial entry trade alert to my group was $35. I think it risen maybe 6 or 7%. It's obviously pulled back a little bit, but I think for me, I would still remain bullish provided that we stay above this 200 weekly simple moving average. Nike is doing as expected. We've obviously had a completed double bottom. So I think an entry in here, I would expect a little bit of a pullback. I think that would be logical. But I don't see any reason that if the market plays ball, if we see an advancing market, then I do feel like $100 is a logical target. If we break above $100, then obviously it's off and running. But for those of you in Nike at the moment, again, $100 I think would be logical. Netflix is very, very difficult. I've obviously touched on this one numerous times over the last few months. For those of you that are maybe watching me for the first time or watching my Netflix chat for the first time, I've been bearish on Netflix since this, and it's just breaking through the levels. Obviously, there's a fundamental question mark over it at the moment, but there's also a technical question mark. I think the logical expectation is, because it's in a bearish downtrend at the moment, it makes sense that this comes down to 230. But obviously, for those of you out there that are maybe holding positions in Netflix and you don't really understand the technical side of the market, I would urge you to maybe look at, potentially learning. I think that would be the message. I think that the best traders that I know combine fundamentals with technicals, because technicals absolutely matter in this day and age. But yeah, fingers crossed for those of you that are holding. I would hope to see it rebound, but it's perfectly logical that we come back, retest, and fall away again. So, be very, very mindful with Netflix. Square Inc. is showing signs of recovery. I think when we broke down below this level, I thought, and it's still possible that we come down and we test the $50 lows from December. I think that could happen. I think we got down as low as 54.50. So the thesis was correct. It's just price hasn't obviously gone as far as maybe you bears wanted it to. Now that we're moving back up into this level here, I think this is the level to watch next. So if you're in Square at the moment, it's not a chart that's appealing to me in any way, shape or form, but given I get asked about it almost daily, I thought I'd better produce something for you guys. Teradyne is breaking out. It's breaking out from a cup pattern, a very clearly defined uptrend, lower highs, lower lows. Sorry, let me rephrase that. Higher highs and higher lows. There we go. So yeah, it looks like we're breaking out here. So, Teradyne, it's been moving sideways the last few days, but that's perfectly normal given the overall market at the moment. NVDA, I believe after hours, it's been beaten down a little bit. I think we can probably look at Micron Technology earnings this evening, and I think that's probably one of the reasons for that. I think it makes a lot of sense. It's obviously starting to move sideways. I think the hope with NVIDIA was that when we got this break to the upside and it started to really move, that it would go on and hit 290. That's not really happened, as we can see. It started to move into a sideways range. It's not terribly appealing anymore. So I think for me, I would probably just be looking at above $200 just to remove the gambling aspect to the trade. Good old ROKU. Now, again, I obviously I understand ROKU is a controversial one, super popular stock. I don't know why. Obviously, over the last 12 months, it's been on a rocket ship. Those kind of returns are ridiculous. So I understand, a potential attachment to a stock. Don't get me wrong, but sometimes trends just end and you just let them go and you just say thanks very much, Mr. ROKU. We're seeing a stock that's starting to steadily break down. Bear flag, dead cat bounce, potentially another bear flag here. So those of you that are in ROKU at the moment, I do feel like it represents a lot of gambling. I don't think there's any skill in the trading side of things. I think those of you that are justifying your trades into ROKU, you'll be doing it on minute time frames, 15-minute time frames. It's not an approach that I find provides much success. So I think if you look at the bigger picture. You want to read the book. You don't want to just read a couple of pages. And I think if ROKU breaks below $100, I think we go to 80. So be very, very mindful of this level here. I think the 50% level is something to absolutely observe. ABBV was highlighted at the weekend as a potential breakout. It's starting to move. I think we're probably going to move towards 77. Somebody was asking me about it. So for those of you that are maybe looking for a new entry into ROKU, I think that's maybe what you do. If you've missed this entry, then you can maybe look. If you get a move above that 200 simple moving average, then ABBV might be appealing to you. Now, Campbell Soup is another interesting one. We've obviously broken out of a box pattern. It's starting to move, and very, very similar to ABBV actually, where if you missed this breakout that was highlighted, I think a week or two ago, then there's a potential here to move in above the 200 simple moving average. Now, obviously, there's a good upside potential with it as well if we take the view that it's going to go back to 68. But, you know, quite honestly, in the current market, the way it is, it's very difficult to want to ride a trend for, 3-4 months, given that you have lots of, fluctuations in price. It does require a lot of discipline. It does require an intimate knowledge of trade management and how to extract maximum profit from a trade. So I think Campbell Soup, do some due diligence on it. Western Union, my guys obviously got an alert on this a few weeks ago. It moved beautifully. It's obviously pulled back. I think this is the chart now. I think previously the chart highlighted was a breakout from a 4 or a 5 year base, which is still valid, but I think now this is the chart to concentrate on. So I think we observe, clear uptrend. I think this is the zone that we might want to get defensive. And below that level, I think there's a problem, but above it, I think we've got to be bullish. United Rentals, again, slowly waiting for a confirmed breakout here. I've been waiting months for this one. So absolutely United Rentals is something that I think warrants a bit of due diligence. I think, looking at the chart, it just makes a lot of sense. I mean, especially when you observe, the potential upside there, which, we're looking at a good 50% upside. So, yeah, that meets the requirements that I have. So, yeah, hopefully you can do a bit of due diligence on that one. Somebody was asking about UGLD today, one of my clients, no less. And, he highlighted potential head and shoulders pattern. So that's a consideration for this particular ETF. So if you're out there, I would be cautious. I think, especially if you're bullish, you can be a optimistic bull, but with a little bit of caution, if that makes sense. Lam Research, again, highlighted a couple of weeks ago, and the breakout looks like it's moving. Now, again, it's going to be very difficult, I think, for semiconductors over the next 24 hours, just because I think Micron, although good earnings, I think weak guidance is probably going to drag semiconductors a little bit. So you would expect Lam Research to take a little bit of a hit. I think that would be normal. But, it's breaking out and it's moving, and, we like stocks that are moving. SPLK, I think for those of you that got in here on this entry that I highlighted again a few weeks ago, I think, yes, it's had a pullback, but what you've got to understand, for those of you that were asking, you've got to understand that stocks just don't go up in a straight line. They go up, they pull back, they go up a couple of days, they pull back 3 days, they go up 3 days. That's just the way trends work. You need to be comfortable with the risk when you enter a position, and you just need to manage strategically. It sounds very simple, and that's because it is. So for SPLK, the stock is moving. So yeah, just apply patience, and hopefully we reach the upside objective, which, you know, that's a 30% range, which is beautiful. So yeah, just a little bit of patience. Okta, it just doesn't look massively appealing in any way, shape or form, unfortunately. I know there's many of you out there in the cloud tech that can't let go, that, you know, cloud tech has run its course. Could they be offering opportunity? Absolutely. But what represents a better risk for you? Would it be Okta, or would it be PG? Would it be SO, which again my client group got an alert for a few weeks ago, and that's moving beautifully. So you just need to be super mindful of stock selection, what represents a gamble. If you're out there and maybe you do struggle a little bit, you can stick around for a minute or two at the end. There might be a couple of things that we can do to help. Facebook, I think Facebook is now starting to look a little bit ropey. I think we are very clearly in an area that we might want to start consider getting defensive. You know, we could absolutely rebound in the coming days, and this thing just keeps moving higher. We are in, you know, in theory, a structural uptrend. Like I said, higher highs and higher lows. So yes, we're in an uptrend, but I think at the moment only just. I think if you get a break below, and let me just highlight this. I think if we break below that level, I think you do see quite a bit of selling action there, which might be a problem for those of you that are maybe in Facebook. I think if that happens, I think you can probably expect that level to kind of get tested next. So yeah, if you're out there in Facebook, for those of you that were asking, that's kind of how I see it at the moment. Trade Desk, again, it's interesting, and I'm going to give you two separate schools of thought on this one, okay? So we've reached oversold conditions. Those are characteristics of downtrends, okay? That's just the way it is. I know there's many of you out there that are maybe short-term traders, and you're saying to yourself, well, you know, we're oversold, we need to buy this stock because it's going to bounce. Sometimes it just doesn't bounce, and that's the problem with having an RSI strategy, because we know that these are characteristics of downtrends, and you would expect price to keep declining once we reach oversold conditions. However, you switch it over and you look at the weekly chart, and we can see that we're getting a bit of a bounce here from the 50-day simple, the 50-week simple moving average. So there's a bullish case and there's a bearish case with Trade Desk. Now, because of the conflict, I just would automatically stand aside, because again, it represents a gamble. I'm not looking to gamble in the market. I want to take educated positions in the market. And for me, Trade Desk, because of the conflict, it could literally go either way on a technical level. I accept it's a good company, great management. I know all that, but sometimes the market just doesn't play ball. Sometimes these stocks, they fall out of favour with the big money, because the big money's made 100% in 12 months on it. You know, a lot of those guys are happy with that, and they'll just remove their profit and reallocate elsewhere, and that's why you see a declining market. It's not because the stock's gone bad, it's just because it's out of favour, and that's just how Wall Street works. I think with Amazon, I think this is the chart. I think we absolutely need to be mindful of that level there. I think it's very clear that we've got technical resistance. So I think for those of you that are asking about Amazon, I think you can be bullish on Amazon, but absolutely I would be looking to build in the analysis. I think this is an analysis of fit. I think it kind of fits. So yeah, I think for me though, I would probably look to action a position in Amazon if you get a clean break above $2,000. If you're looking for a new entry into Amazon, it doesn't make a lot of sense. I think it's just day trading gambling, and that's not a game that I want to participate in. So if you've enjoyed that, please do subscribe to our channel. Like I said, bottom right hand corner. I did say that if you are somebody that struggles, you might want to stick around for a minute at the end. Now, obviously, the analysis that I've provided, it's from honeystocks.com. We are, I suppose, trading educators. We have a very logical approach to the markets, as you've just seen. We're really looking to stay in trades for weeks to months, but we're not day trading gurus. We're not get rich quick schemes or any of that nonsense. We deal with a lot of strategy, relative strength, rotation. We teach you all the ins and outs of technical analysis and how you can apply it to your own trading. The unique thing about what we do at honeystocks.com, everybody that goes through our program, we integrate into our client group, and you get the benefit of all our trade alerts. Now, I am also bound by a code of ethics as well. Everything stated here is fact, and you can have a look and see if there are any what the charts are that I'm posting to the group. That's obviously 2019. The trading alerts, we have an emphasis on quality over quantity. We're not shouting out 20 trades a day, nothing like that. Generally speaking, it averages between 1 to 3 a week, and it has done over the last couple of years. So if you're somebody out there that is maybe learning from losses, we do have a very specific type of individual that we can help. I think if you're out there and you maybe struggle to fit trading around your career or maybe a business, maybe you want to get away from day trading, maybe you just want a bit of consistency and you want to learn this stuff for yourself and not just follow others. Maybe if you want to reduce the stress in your trading, I know what it's like because I think everybody's been there at some point or another, and it's only when it's all pointed out to you how it all works that you have that aha moment. And that's something that we've helped individuals all over the world. It's very simple. If you are somebody that does genuinely struggle with your trading, feel free to jump onto our website and book in with us. We're not going to try and throw a program down your throat. We're not going to try and pressure you into anything. I think the best thing to do is jump on a call and figure out what it is that you struggle with and make sure that we can actually help you in some way, because quite often we can actually help people on a call and you don't need to sign up for anything. But if it's clear that you are somebody that struggles really badly and you need professional assistance, then obviously there will be options for you to do that. But we're not going to try and ram something down your throat and make you sign up to something. It's not our style. We just genuinely like helping people, and I think at this point I've had literally hundreds of conversations with traders all over the world. So if you're somebody that struggles, just jump on. We'd love to hear from you, and thank you very, very much for watching.